Nilesh Shah joins us now, Managing Director and CEO of Envision. Nilesh, good morning. Thank you for joining us. You're supposed to be in the studio, right?
I guess the invitation was not complete.
Okay, I'm extending a permanent invitation. Please come to our studio on all interviews.
Thank you so much, Nikunj. Great pleasure. Thank you so much.
Okay. What do you make of the price action in small and mid cap stocks? Do you think the excesses are out?
Uh, yes, Nikunj, I think a lot of froth is out. I see a lot of stocks which have corrected by whatever, between 15 to 25%. And there's great amount of caution, even at least among investors as well, not to increase allocations for now in the small and mid cap segment. So I'd probably say that a bit of that risk on trade has kind of come off, and we are in a bit of a risk off zone for now. So I clearly think that there's a lot of froth which is already out, which is out of the system right now. A lot of price damage has materially happened. It's now more about stocks trying to consolidate at these zone and waiting for really the next earnings season for the uptrend to resume.
I don't want to get this one wrong, Nilesh. Your view is that the excesses in the small and mid cap stocks are over and bulk of the price correction is also behind us. Can I say that?
Oh yeah, absolutely. I mean, absolutely. I've clearly seen lots of stocks which are off quite significantly from their highs. So especially a lot of the gains which have happened in the current calendar year from the start of the year, they're almost out. They're no longer there. So those gains have kind of, in a way, pretty much eroded. So my sense is that there's a fair bit of now sanity and excesses are out.
Interesting. But Nilesh, the tactical call in the market seems to be that be safe, move a higher allocation to large caps. They are the ones which underperformed. The frenzy was all around small and mid caps. Would you recommend any such allocation?
No, I don't think so, Aisha. I think, these kind of tactical allocations really don't make sense. Yes, if you are essentially looking for maybe the next 2 or 3 months, it's quite possible that large caps will probably relatively outperform. They may not fall as much. They might actually rally a bit. But I don't think beyond that, I still believe that a lot of the mid to small sized companies, a lot of bottom up opportunities, they will continue to outperform over the next 1 or 2 years, or maybe even 3 years. And clearly, as long as, of course, you're buying good quality, you're buying companies which meet governance standards and meet some of the liquidity norms as well. I think if all of that is in place, I still think some of the smaller to mid-sized companies have the ability to grow at a much faster pace or higher pace. A lot of these companies have their balance sheets which are pretty much intact and well positioned for growth for the medium term. So I think as a long-term India believer, and if you're an India optimist, I think clearly having a more having a more allocation to mid to small caps over the medium to long term will probably still continue to be a better strategy.
Great. You're perhaps one of the first voices who in the last fortnight have actually come on record and said that. But Nilesh, where within small and mid caps are you still finding those value buys, those bottom up stories that you just talked about?
Across the board, I clearly believe across the board, apart from consumer staples, which probably still continues to be a weak spot from a growth perspective. But when I look at technology services, when I look at online digital companies, when I look at some of the capex oriented companies, companies selling equipment, consumables, and components to the manufacturing and infrastructure sector, selectively some of the export plays. Clearly, energy is emerging to be a very, very big theme. Clearly believe that energy is a strategic priority for the government and for the economy and for the nation. And so clearly, I think across the board, there are opportunities across sectors and across businesses. I see lots of bottom-up opportunities out there, especially post this correction and the kind of consolidation that we could see over the next few weeks or maybe the next 2 or 3 months.
All of those names for us, I'm sure our viewers would be mighty pleased, but I won't probe you. But interesting that, you're looking very closely at online digital plays, niche IT services. And just a short while ago, we were chatting about how Zomato, in comparison to the other new age tech listed companies, is the only one that is now hitting new highs. How are you looking at some of these businesses with the adoption of AI, digitization, fast picking up pace? What this means for the traditional IT players as well as the new age tech companies?
So the online consumer or the online fintech space, I clearly believe these are businesses which are making rapid strides. The ability to effectively leverage on the digital public infrastructure, as well as essentially building their own technology capabilities to become increasingly relevant to a wider mass of consumers across India. I clearly believe that this is helping them to kind of grow and grow in a relatively outsized manner. Some of them have created very strong moats. Some of them continue to be net cash positive, which means they have lots of room to invest further. And you really don't see too much of fresh competition emerging, given that there is some kind of a funding winter in the venture capital and the private equity space, wherein their set of investors are asking them a lot of relevant and difficult questions, which we in the public markets keep asking, the companies and the management. So I clearly believe that yes, these are companies which will continue to do exceptionally well from a medium to long-term perspective. These are, if you ask me, the consumer franchises or the fintech franchises. It's pretty much like betting on some of the MNCs, the HULs, Nestle's 20, 25 years ago, or betting on, say, some of the new banks or then new banks like HDFC Bank, ICICI Bank 20 years ago. So that's one side of it. On the technology services side, obviously that's a B2B business focused on international opportunity, looking at developed markets like US, Europe. Out there, specialized players are going to do extremely well. I clearly believe the days of the large cap IT companies, they're relatively numbered, apart from short-term trading opportunities that may get created. But otherwise, I see a lot of these specialized technology services company providing ER&D services and some of the other software-defined vehicle space. Those are really the kind of opportunities which I believe are headed for strong double-digit growth for the next 3 to 5 years.
Let's look at what we discussed and what we've been discussing. You've been a big proponent of Policy Bazaar. I mean, when the world was looking this way, you were buying into Policy Bazaar or PB Fintech. Where is that business headed, looking at the fact that the company is growing, insurance sector, the worst is behind us, and they're committed to generate profit in about 18 months from now?
So, Nikunj, I still believe that PB Fintech and Policy Bazaar continues to be a very, very strong technology-driven franchise. It's almost become synonymous with the category. They continue to make huge amount of investments in their brand and creating the awareness for insurance. Despite the double-digit growth which the insurance space has witnessed over the last 5, 10, 15, 20 years, I still believe that insurance penetration in India is still a fraction of what it is globally and what it is in developed markets. And so clearly for the next 10, 20 years, insurance as a space has the ability to grow in double digits. Within that, the share of online is been growing rapidly. And despite the 30-40% growth rate, which the online space has been registering, still its share in the overall insurance pie still continues to be in low single digits and still continues to be a lot less versus what it is in markets like the United States and China. And this gives a business like PB Fintech and Policy Bazaar and the entire online insurance as a category to continue to grow in high double digits for maybe the next 5, 10, 15 years. What makes this business even more special versus the rest of the online and e-commerce businesses that every day you don't have to nudge your customer to keep buying. Versus that here you have a customer, he buys a policy, he pays the premium and you earn your revenues. And these revenues keep piling up over a period of time and they create a stream of annuities. This I clearly believe continues to be an exceptional opportunity, rare to see businesses like this. Of course, there are risks coming in from the regulatory. There can be risks coming in from regulatory side. There can be risks coming in from competition, from disruption. Yes, these are some of the risks which are there for any business today. But nevertheless, net of these kind of risks, I still think on a risk-adjusted basis, PB Fintech and Policy Bazaar continues to be an excellent capital efficient growth opportunity.
PSU stocks which you've been wanting to buy and you're getting that great entry point after the recent bout of correction?
So Nikunj, yes, there are several businesses across technology, consumer. I think even in the capex side. So, for example, the capex side, we've seen a sharp correction in, say, the stock price of Bharat Earth Movers. It's corrected quite meaningfully, and we've just started to own Bharat Earth Movers, and clearly it's in the right spaces of railway, defense, mining equipment. A bit of the restructuring is behind us in terms of the land holdings being hived off. It's probably fallen from those highs of 4,000, 4,200 to 2,800. I think it has created a meaningful entry opportunity out there. The other is essentially a more ER&D oriented business, which is Sasken, which we've been owning, and I think it's corrected from about that 1,800 odd levels to 1,400, 1,500 zone. It still continues to be reasonably priced or underpriced from a valuation point of view. The company is kind of got in a new management or a new CEO a year back. It looks like that there are early signs that the business is poised for strong growth over the medium to long term. So that again, I think is a good place to be in, and I think it's poised for some good times.
Interesting. Now you're talking, right? We have enough stocks to talk about. But Nilesh, other than that, a large part of your portfolio is also tilted towards consumption, and these are themes that we've talked about many often as well. Still convinced about that theme? Still invested in those names?
Oh, absolutely. I mean, within consumption, the whole premiumization opportunity continues to play out really well. And we own several companies, a couple of companies in the alcoholic beverages space, where these individual companies are riding on premiumization and the increasing penetration and the increasing acceptance or social acceptance of these products. So that's a space we continue to be very constructive about. Hospitality is where I think the average Indian consumer wants to essentially allocate good amount of time and their consumption wallets towards the leisure side. So hospitality continues to be, again, a very exciting opportunity that we are positive about. And the third area is, of course, luxury items and the luxury space. So a whole bunch of consumer businesses driven by both premiumization and the shift towards luxury products is, I think, a good, and we are playing a basket kind of a opportunity here in that entire space.
Okay. Nilesh, if one really looks at the broader construct which is there in manufacturing, what is the best way to look at manufacturing? Because now everything is getting connected with manufacturing, whether it is EV or whether it is TV. Everybody is now buying stocks in manufacturing space.
Oh yeah, I mean it's a very, very, very broad term. It's a very broad term, and the reality is that so far, all of us were just looking at, say, two broad opportunities in India. One is essentially the consumer economy, and the other is the digital economy. These were the two big economies. I think now, in the recent times, the physical economy, driven by manufacturing, driven by infrastructure, driven by this whole energy transition, decarbonization, electrification, all of these put together are becoming an extremely interesting and a meaningful part of the overall investment canvas. So yes, I totally agree that manufacturing is becoming meaningful. And I clearly believe the low-hanging fruit is indigenization, is localization. So businesses where we were earlier importing and we're now trying to kind of manufacture locally, or after meeting the domestic demand, if you're well positioned to kind of exports, I think these are very great opportunities, and it still continues to be a combination. If you're fine with valuations, I think the EMS space is interesting. Railways, defense, again, is an extremely interesting space where I clearly believe the spending is going to be unabated. And then we have, of course, the traditional auto component companies and the industrial consumables, which essentially are catering to several end user segments. So I clearly believe, yes, it's a nice mix of different kinds of opportunities which currently are there. And I continue to believe that this is going to be India's decade for manufacturing. And so to that extent, it is a very, very relevant and a meaningful opportunity for long-term investors.
To your mind could be 2 or 3 stocks which you, from the large cap space, which you would say have scope to outperform the market in a meaningful manner? I mean, just the large cap names which you think have potential and they have a probability and a possibility of becoming decent wealth creators from here in next 2 3 years.
I'd still think Nikunj, best is to probably look at the PSU side of it. We don't yet own it meaningfully. I talked about one name earlier on, but I clearly believe that PSUs are in for some kind of a more long-term re-rating. They have kind of re-rated meaningfully, but obviously the stock prices have rallied quite significantly. A correction has set in. It's quite possible that over the course of next maybe couple of months or so, if there's further correction, I clearly believe that even in the large cap space, the PSUs do offer a great opportunity. And post the elections, if a fresh bout of reforms come in specifically directed at driving more efficiency among the PSUs, clearly believe that's going to be a great opportunity. The second is private banks. I think private banks have got kind of hit or have underperformed over the last 2 or 3 years or so. I believe private banks again are poised for some good growth. And third is the entire auto pack. The auto pack is automobile pack is essentially still well poised. They seem to be headed for some strong growth over the medium to long term. So I would probably think that these three, which is PSUs, large private sector banks, and third is the automobile companies in the large cap space, which can do well. We own some of them here as well. Also, apart from that, Reliance. I think Reliance again continues to be a good place to be in. I think it's in the right verticals across energy, retail, digital, and that continues to be a very, very interesting play going forward.
Sure.
And we own it as well.
Sure. Nilesh, when you say autos, that's also as large a pool as manufacturing. Specify what within autos do you like?
I clearly believe both the passenger vehicle segment looks to be very good across both the passenger car segment as well as the two-wheeler segment. I think both are very, very interesting pockets. The CV space and the tractor space for now is likely to take a breather. But I think clearly the passenger vehicle segment, including both cars and two-wheelers, I think is an interesting place to be in. Maybe, along with the market, you could be more opportunistic and let there be some kind of correction there. But I think once you see a 5 to 10% correction, this is a good place to be in.
Okay, and anything within the entire metals basket?
So we own a metals company called Kalyani Steel. We've invested in it very recently. I think it's of course a traditional steel company, but has now announced some major plans for investments in specialty steel and titanium, so that it can start catering to automotive, aerospace, and defense kind of businesses. Clearly believe that the whole area of specialty steel looks very interesting from a medium to long term perspective. If we believe that we are going to see a lot of investments in the manufacturing space driven by localization and indigenization, all those kind of businesses will require some high quality material suppliers. And within that, clearly specialty steel looks to be an extremely interesting space. So we just have one play out there, which we believe is interesting.
All right, thanks very much for dishing out all those sectors and stocks and outlook on the markets. Nilesh, good to have you as always.
Thank you so much. Thank you.
Dana, half a...
If you like this video, then like, share and subscribe to ET Now.